The markets are currently open and navigating a session of intense scrutiny, particularly in the microcap AI sector, where volatility is not just a feature, it is the entire landscape. As we speak, Datavault AI Inc. is trading at exactly 2.08 USD. That reflects a downward move of 0.050 cents or a decline of 2.35% on the day. On the surface, a 2% drop in a stock priced around the cost of a cup of coffee might look like standard daily noise. It is easy to glance at that red figure, shrug, and move on to the titans like Nvidia stock or Apple stock. But if you look closer, that 2.35% drop is not just a fluctuation. It is a test of a critical psychological floor. The market is currently trying to decide if this company is a legitimate pioneer of a new asset class or just another legacy tech firm painting itself with a fresh coat of AI paint to survive. The expectation for a company like Datavault AI, formerly known as Summit Wireless, a company focused on audio technology, is that this is a pivot play. Investors are naturally cynical. They see a company that spent years trying to make high-end wireless audio a standard, struggling to gain massive traction, and then suddenly rebranding with AI and data in the title right when the artificial intelligence hype cycle is at its peak. The expectation is that this is a marketing gimmick designed to sell shares to retail investors on Robinhood stock trading forums who are desperate for the next lottery ticket. That is the safe, skeptical take. However, the reality might be significantly more complex and potentially far more lucrative. The reality is that we are entering a phase in the economy where data is no longer just a byproduct of doing business. It is becoming the business itself. Datavault AI is attempting to build the infrastructure to price, value, and monetize data as a tangible asset on a balance sheet. If they succeed, and that is a massive if, they're not just pivoting, they're building the Moody's or Standard & Poor's for the AI age. The disconnection between the failed speaker company narrative and the data valuation engine reality is where the opportunity lies. We are looking at a company that just secured a $150 million financing deal, not in cash, but involving Bitcoin, with Scilex holding. This is one of the most bizarre, aggressive, and fascinating capital structures we have seen in the small-cap space, and it demands a deeper look than just checking the daily percentage change. Let's analyze the immediate price action. We are hovering at 2.08 USD. This is a dangerous and critical level. Technical traders using platforms like Interactive Brokers trading software will tell you that the $2 mark is a psychological fortress. If it breaks decisively below $2, you trigger a wave of stop losses from the algorithmic traders and the retail crowd who bought in during the hype spike to $4 earlier this year. But notice how the stock is behaving today. It's down, yes, but the volume is absorbing the selling. It isn't collapsing, it is compressing. This compression often happens right before a major move. The market is digesting the recent news of their revenue guidance raise, predicting $200 million in revenue by 2026. That is a staggering jump from their current numbers. The market doesn't believe it yet. That is why the stock is at $2 and not $20. You are essentially betting on whether that guidance is a hallucination or a roadmap. To understand why this stock is capturing attention on investing sites and causing debates in Fidelity Wealth Management offices, at least among the more speculative managers, you have to understand the product. Datavault isn't building LLMs like OpenAI. They're not building chips like Nvidia. They're building the ledger. Think about the biggest problem AI faces right now. Where does the data come from? Who owns it, and how much is it worth? If you are a massive corporation with terabytes of customer history, that data is valuable to an AI model. But how valuable? Is it worth $1 million? $10 million? Currently, there is no standard. Datavault AI, through its data score and data value platforms, is trying to create that standard. They want to be the auditor of the data economy. They have partnered with IBM and their watsonx platform to facilitate this. This isn't just a white paper dream. Having IBM in the mix adds a layer of institutional legitimacy that most penny stocks can only dream of. But let's talk about the elephant in the room, or rather, the Bitcoin in the room. The recent financing deal involving Scilex Holding was highly unusual. Receiving payment for warrants in Bitcoin aligns Datavault with the crypto-adjacent market. This moves the stock into a different basket. It is no longer just correlated with tech. It is now partly correlated with the liquidity cycles of cryptocurrency. For investors using the Robinhood app or engaged in Robinhood crypto trading, this makes DVLT a hybrid vehicle. It is an equity that holds crypto assets and deals in data tokenization. This increases volatility exponentially. When Bitcoin runs, Datavault might catch a bid simply by association. When crypto corrects, Datavault could face headwinds regardless of its operational success. You have to be comfortable with this dual risk profile. You are not just analyzing a software company, you are analyzing a treasury strategy that looks more like a hedge fund than a traditional corporation. I want to pause here and ask you directly. How do you feel about companies holding massive amounts of Bitcoin on their balance sheets? Does it make you trust them more as forward thinkers, or does it make you nervous about their stability? Comment below with your thoughts on corporate Bitcoin treasuries. I am genuinely curious if this trend is a red flag or a green light for you. Now let's look at the chart history because it tells a story of violence. The stock has a 52-week range of roughly 25 cents to over $4. That's a 1,500% spread. If you're a conservative investor looking for steady dividends in your Fidelity mutual funds, you should probably close this chart immediately for the adrenaline junkies. The run-up to $4 was driven by the initial excitement over the rebrand and the Scilex news. The fall back to 2.08 USD is the hangover. But here's the contrarian take. The fall was necessary. The stock went parabolic without the fundamentals to support it in the short term. Now that it has retraced 50 to 60% of that move, it is entering a value zone relative to its potential. If, and again this is the key, if they can actually hit even half of that $200 million revenue target, the stock is trading at roughly 1 times future sales. In the AI software sector, multiples are usually 10x, 20x, or even 50x. The discrepancy suggests that the market is pricing in a 90% chance of failure. If the probability of success is actually 20% or 30%, the stock is mathematically undervalued. We also need to discuss the pivot risk. The company was Summit Wireless. They own patents for WISA, wireless speaker and audio. This technology is impressive. It allows for high-definition audio without the latency of Bluetooth, but it never became the Wi-Fi of audio that they hoped it would be. Critics argue that the shift to Datavault AI is a sign of management throwing spaghetti at the wall. However, they're keeping the acoustic division. In fact, they argue that the acoustic data is part of the asset class they are valuing. It's a synergy argument. Whether you buy that argument is up to you, but it's worth noting that they're not abandoning their IP portfolio, they are trying to monetize it differently. This is important because it means there is a floor value of the patents even if the AI side takes longer to ramp up. Institutional activity in this name is sparse but growing. You won't see this in every Schwab Intelligent Portfolios allocation. It's too small and too risky, but we are seeing volume spikes that suggest some larger players are accumulating. When a stock trades 25 million shares in a day, that isn't just retail clicking buttons on their phones. That's algorithmic accumulation and distribution. The recent days have seen volume dry up slightly as the price compresses, which is typical before a breakout or a breakdown. The Bollinger Bands on the daily chart are tightening. Energy is building. The 2.08 price point is the calm before the storm. Let's discuss the macro environment. We are in a period where online investment interest is at an all-time high, but discernment is at an all-time low. People are buying tickers, not businesses. Datavault benefits from this because DVLT sounds cool and AI is in the name. But for the stock to sustain a move back to $4 or $5, they need to show a contract. Not a partnership, not a guidance update, but a signed contract with a paying customer who is using the DataScore platform to value their data. The moment they announce a Tier 1 client, a bank, a hospital network, a major retailer using their system, the skepticism will evaporate and the short sellers